Hello and good morning. Daylight savings time is in effect, so even though it's 7 o'clock, still looks pretty dang dark out here. So I apologize about the light. Nothing we can really do. But for those of you listening on audio only, which is what this is really meant to be, welcome. So in today's video, I wanted to go over about asset accumulation and insurance protection. So it's come to my attention that a lot of individuals might not understand what the life insurance or insurance in general is for, right? So insurance is really to protect kind of your future from insurable events, right? So like life insurance insures against the future probability that you die before you were intended to. Whole life insurance or permanent life insurance is made to be more of a protection for you. Well, basically it's actually for the one you're giving it to. Whole life insurance is to protect, or actually to provide, inheritance. It can also be used to protect a short, like what term insurance is there to protect, which is kind of like your obligations. In my kind of planning process, whole life or permanent life insurance as an index universal life, current rate universal life, guarantee universal life, and whole life, those things are made to, well, if it's not a cash accumulation product, those things are made to pass down wealth. To have wealth that is, or to have funds that are passed down to the next generation, to have funds that are passed down to, grandchildren, children, probably grandchildren, because with their regular children, if you buy whole life or permanent life, you're probably looking at, thinking you're gonna live till at least your 80s. So by then your children who are in their 60s, unless you bought it for them because they're, that you were gonna need their help for long-term care, and they're not gonna have a retirement because they're not gonna be able to work. But that's not normal. That's not the normal planning procedure for life insurance. It's not meant to replace your children's retirement accounts. I digress. So, when it comes to asset accumulation, a proper asset kind of balance is necessary. Kind of saying, all right, I have my stocks, I got my real estate, I have my checking account, I might have permanent life insurance policy, I might have an annuity, right? So all those things go into the asset column, which pretty much assets are a way to derive income. Assets are not worth anything until we derive income from it. Sometimes we would sell these assets to derive income. Sometimes we quote unquote turn them on to derive income, right? Like an annuity, you would begin the income rider, or you would annuitize it. For real estate, if it is an investment property, you would collect rent, right? So there's a lot of different things that you can do with assets, but the objective when you have an asset is to actually get income from it, whether it be the sale of it or the inherent income generation properties that this particular asset has. Insurance, on the other hand, is to protect that asset from not being able to generate income For example, we have homeowners insurance, which protect in case something happens to that home so that it cannot provide asset or cannot provide income. Sorry. And what you do is you pay a premium for that insurance. For stocks, sometimes or some people will buy put options, which, you know, give the buyer the right to sell their stock that they might hold long at a certain price. And then for life insurance, term life insurance, it is in case you yourself are unable to generate income because you passed away. And then your spouse or your kids would collect that insurance because you are not with them any longer. Now, short-term or disability insurance is there to protect you from not being able to work, right? That's to protect you if you survive whatever disability, illness or accident, whatever it is. So insurance is really there to protect future income or loss of thereby income. So a lot of planning. You can't just buy a whole bunch of insurance and then rely on that for retirement. You need to have a good balance. In the future videos, I know I say I'll do this, but I'll go over kind of what I own and why I own it, and where my shortcomings are. Definitely not where I want to be as far as savings and all of that jive. But you gotta start somewhere. I figure revealing my portfolio would kind of give everyone a little better holds on what's going on. Now, back to the topic at hand, assets and insurance. So, if that's the case, where does permanent life insurance go? That would depend on the purpose. Back to our example of permanent life insurance for insurance, you would put that insurance in the insurance column because the purpose of this insurance policy is to protect against, or actually, it is to provide in case of your untimely death as an inheritance. Now, what this does is for people who have the legacy need or the inheritance need, they want these people who have this policy want to provide an inheritance for their children, grandchildren, charitable organization, whatever. They can now use up their assets because they have this whole life policy or this permanent life insurance policy to provide the inheritance that they wanted to. They don't need to, for lack of a better term, they don't need to save their retirement money to provide an inheritance. They can just spend all their retirement money and the whole life policy will pay or will provide that inheritance. So when planning for this person, these people, you would put this insurance not in the insurance column or in the asset column. You would create a separate column which is for inheritance or legacy, as we like to call it, in the insurance planning or financial planning space. So, what if we wanted to use it for just regular insurance? emergency? What if they were in their late 30s and they needed this insurance to protect their future stream of income in case they died too early? Well, then I would probably suggest purchasing term, not a permanent life, or perhaps a blend of both if they wanted the cash accumulation aspect, the asset column aspect of life insurance, right? Because if that was the case, then they should provide or get both. They need to get something for protection now, pure insurance protection, and they would need something for cash value accumulation. And a lot of times the best way to do that is to get a term policy and a permanent policy. And then we would have a term rider or potentially some kind of a decreasing death benefit aspect of the whole life or permanent life policy, so that when the insurance, the life insurance to protect that income is no longer necessary, they're no longer paying for it. Because for life insurance, the insurance portion of it, the term insurance portion of it, is really only necessary during the working years of the person. Because when they no longer work, the life insurance is more in place to protect for final expenses and for cash value accumulation. Now, what if someone just needs or is looking at a way to store and build wealth? Well, in that case, you wouldn't even think about purchasing term life insurance. You wouldn't even have any focus on death benefit other than to support policy to make sure that this life insurance policy is not a modified endowment contract. And you would do that quite simply by coming to an agent who specializes in cash value accumulation life insurance products. And that life insurance, that permanent life insurance, would go into the asset column, right? You go into the asset column because it is meant to be an asset for generating income in the future, which life insurance policies are quite good at. So, 13 minutes in the video. Is life insurance an asset, or is it insurance? It's a little bit of both. It's a little bit of the third one too, legacy, right? The fact of the matter is, though, it's an asset. So life insurance, for permanent life insurance, is an asset. And the difference in which column it really goes in for permanent life insurance is the use case. So are you going to be using life insurance as a way to transfer your wealth, right? Tax-free, death benefit, much better than leaving your children money in your IRA, much better than leaving children money in your 401k, much better than leaving money in a checking account that's gaining very little interest. Is it for you to generate income via loans, the tax value, the tax effectiveness of a permanent life policy? Is that why you're using it? Substitute for bonds? Substitute for just putting money in the checking account? Is that why you're using it? Why are you getting this life insurance? What is it for? Oh, I've reached my location. As you can see, that car's headlights is still on, glaring into my face. I will see you all in the next video, where we'll talk more about stuff.